Hey everyone, Manish here, a realtor in Regina. Over the last few months, interest rates have been one of the biggest questions I'm getting from my buyers and homeowners. Should we wait? Should we buy now? Or rates going to drop more? So today I'm going to break down what's actually happened over the last few months, what number tells us, and what most experts are expecting going forward into 26 in simple terms. So let's start with what happened in the last few months. So let's start with the recent trend over the last few years and a bit. Bank of Canada moved away from their aggressive rate hikes and started cutting rates. Those cuts helped bring borrowing costs down compared to the peak. Recently though, the Bank of Canada has paused and held interest rates steady instead of continuing to cut. That tells us one really important thing. The bank is no longer in a rush. They're watching inflation, jobs, economy very closely before making the next move. So what this means for our mortgage rates? Now here's something many people don't realize. When Bank of Canada holds rates, variable mortgage rates usually stay stable, but fixed mortgage rates don't always move the same way because they are tied more to bond markets. So what we have seen over the last few months is more stability, not dramatic drops. So if you were waiting for a huge rate crash, that hasn't happened. It may not happen anytime soon. So what the stats are really saying, compared to the highest point a couple of years ago, borrowing costs are definitely lower, and that's good news. But compared to ultra low rates in 2020 or 2021, today rates are still higher. And this is why many homeowners renewing their mortgages are feeling a jump in their payments, even though rates came down from the peak. So what's next? Most forecasts right now are not expecting big or fast rate cuts in 26. The more likely scenario is rates staying relatively stable unless inflation drops faster than expected or the economy slows down more than planned. In simple words, expectation right now is steady, not sudden relief. So waiting for the perfect rate could mean waiting longer than you think. And what this means for Regina buyers? So buyers in Regina, this actually creates clarity. Stable rates mean predictable payments. Instead of timing the market perfectly, buyers can focus on affordability, monthly payments, and finding the right home. Especially Regina is one of the more affordable markets in Canada. What this means for sellers? For sellers, stable interest rates usually mean buyers feel more confident. Less uncertainty often leads to more consistent activity, especially when buyers stop sitting on the sidelines waiting for the rate changes. At the end of the day, interest rate matter. They are the only one piece of the puzzle. If you're buying, selling, or renewing a mortgage in Regina and want to understand how this affects your specific situation, feel free to reach out. And if this video helped, don't forget to like, subscribe, and I'll see you in the next one.